The cost to BHP Billiton from that dam burst in Brazil could be significant. Those are the words of my next guest, David Lennox of Fat Profits, as I spoke to him about the BHP iron ore mine disaster in Brazil, alongside his forecast for the iron ore price and when it could be hitting that floor. David Lennox, welcome back to Dukascopy TV. It's always a pleasure to receive you.
Oh, Natalie, thanks very much for having me again.
No problem at all. Okay, so let's get started on these iron ore prices. We've seen a 34% slip in the last year. Are we nearing that bottom? Rio Tinto, for example, have said that they're seeing this slip last possibly even into 5 years' time.
Well, look, it's difficult to suggest that perhaps 5 years' time will be the turning point in the iron ore price, but certainly if you have a look at the near term, the markets are very much focused on what's happening in China. And there we've seen over the last 12 months a story of slowing economic growth. And even just recently we saw November's PMI numbers for China coming in at 49.6%, which means that their manufacturing base is still contracting. And that was compared to a number for October of 49.8. So it's contracting, and there's a rate of acceleration occurring there as well. So while we're seeing China in this deceleration in growth, then we'd expect that unfortunately commodity prices, including iron ore, because China's a big consumer of iron ore, will follow the same trajectory, and that is lower.
We've seen Morgan Stanley have come out and said that, without cost-cutting measures, we could see some miners going under. Fortescue, for example, they've already implemented cost-cutting measures, but are we going to need to see more from those big miners?
Well, look, there's no doubt if we do continue to see softness in the iron ore price, then yes, we will have to see further costs coming out of the structures of all the iron ore producers. At the moment, I think BHP and Rio are sitting somewhere probably around $15 US a tonne. And Fortescue Mines is probably sitting not far up the table at probably around $16 to $17 a tonne. So at the moment they've got quite comfortable operating margins in terms of an iron ore price at $44 a tonne. But should we see it start to weaken, then of course you've got all the add-ons that the companies carry with them, the cost of carrying boards and various company structures. So that would require further cost cutting from the big miners to certainly try and maintain their margins.
You mentioned there BHP. Now here's an example of if ever you didn't need an operational disaster, it would be now. We've seen BHP shares bounce back somewhat with bargain hunters sort of driving in off the back of that dam burst with the joint venture in Brazil with Vale. We're seeing now stories emerging that BHP are going to get sued. Really, how much could this end up costing the miner?
Look, it's really in its early stages when it comes to looking at the potential liability that may arise finally from the Brazilian dam incidents. If you cast your mind back to perhaps BP, when the Deep Horizon well ran rogue and obviously spewed a lot of oil into the Gulf of Mexico and killed 11 riggers, BP, I think, ultimately faced a total claim of about $45 billion US. Now, I'm not suggesting that BHP may face that same number, but certainly it will be very significant because we are looking at loss of life, we are looking at destruction of property and also destruction of the environment. We are aware that the Brazilian government is perhaps going to fine them something like $5 billion US for the incident, but of course you've then got all the private persons involved that will obviously bring their own claims. To put a number on it at the moment, it is very early, but all I could suggest to you is that it could be significant.
We've seen Rio Tinto's share price also take a slip. Is this collateral damage almost within this sort of whole BHP bubble, as it were?
No. We certainly think that when you have a look at Rio's share price, it's primarily been falling because, as we mentioned earlier in the interview, the weak iron ore price. It's a significant benefactor from what happens in the iron ore market. And when we see the iron ore prices weaken, because it has so much exposure to that part of the market, then its share price, unfortunately, is going to fall. In fact, the reverse would probably happen in terms of people, given what's happened to BHP, would probably perhaps exit out of BHP and look to Rio to reinvest back into the market. So you would have thought there would have been a reversal of BHP falling and Rio actually benefiting from what happened to BHP. That's not the case, as I said, because Rio does follow what happens with the iron ore price. It's been weak, and of course Rio's share price has followed the same trajectory.
David Lennox, many thanks for the update.
Thanks, Natalie. Thanks very much.
That is all we've got time for right now. Do stay tuned to Dukascopy TV as you can watch the latest Commodities Corner interview investigating the resources market. For now, though, it is goodbye from me.